Good evening, all traders and investors, and welcome to the Nightly Market Intelligence Report. It is now August 3rd, 2014 in the evening, and we have some special news to broadcast out tonight. That news relates directly to all the analysis we did a few weeks ago, what was posted to YouTube about how we were so much closer to a market turning point. Tonight, I'd like to talk about the relative comparison between where we were at that time on the Nightly Market Intelligence Report's findings and where we are today. Right now, we have the Dow closing on Friday's action at 16,493.37. The closest level to the downside as we look into the future and where the possibilities can lead is 16,361.46 and 16,266.23. Now, we do have some volume that's come in here. What we did know of was that this volume was either accumulation or distribution at that time. And as 2 more days progressed into the hard edge, I called the market turning point ahead of time. We were talking about this on the 26th and the 27th of July, specifically right here. Now, since this accumulated volume came in and pushed prices through this level right here, this instantly became resistance now at 16,912.11. Below that, resistance stands at 16,734.19. And once again, here on the lowest level, resistance 16,607 and 42. Essentially right now, locked in a temporary trading channel between here and here. That is here and this level. These are the absolute levels to be counted on for this entire trading week. Now, we did have some smart money volume that came in here. And as you look at the S&P 500 equities, you'll see it as well. And you're going to see a lot of it on our primary market that we're trading the near contract month, September 2014, on the E-mini futures. Here we have MFI way off to the downside, confirming the sell-off. Here we have the SMI way into now, way into the oversold territory. Here, MACD disparity is very wide and very strong momentum to the downside with no end in sight at this moment. Here's your Chaikin oscillator after getting out of the channel here to the downside. No end in sight on the momentum. And here is the first, the second, the third, and now the fourth trendline violation out of the longer-term money flow indicator from the Chaikin side, representing the longer-term institutional money. Once again, short all the way down tonight to here. Okay, so here's the absolute levels. Let's get right into the S&P 500 equities and talk about, again, the relative comparison of the indicators to the prices and where we stand on this to get the full side of the equities markets analysis out of the way and get right into the futures. Now, this sell-off is not as advanced as we just saw on the Dow, but it is obviously backed by smart money volume again after the accumulated volume selling here, right? Again, this is Thursday, this is Friday. So this market closing at 1925.15, right here down to the support level that was located right here, broadcasted out into the future at 1928.53 to the downside. 1897.13, the next major support level that prices should find if they continue to sell off. Right now, our smart money bias market trading call is located at a short level 7, people. That is a short level 7, strong to the downside, trend short. Resistance upside is 1949.27. That's 1949.27 and 1962.29. That's probably about as far as we need to go tonight. So let's get right through the indicators here. You can see the Chaikin oscillator, which is associated with the MACD and accumulation and distribution, is all the way down in major oversold territory. The MACD as well, not as advanced as the Dow, but clearly disparity very wide after the negative divergence here. Volume comes in and the beginnings of a strong sell-off. Once again, people, I called this market turning point back on the 26th and the 27th of July, and everything that I had talked about, all the suspicions of the weakness within the market have played themselves out. And once again, we've been able to provide you with a type of intelligence that even as a mutual fund trader, stocks, ETFs, options, you could have been short here or better. On a mutual fund side, just go flat and wait for prices to settle down if you're a long player and get back in at support if prices are going to turn back around. No need to give a lot of money back here, not at all. Here's the absolute levels for the upcoming week, and let's get into our primary market right now. Here we are, trading mark to the market right now at 19.22 and 50. People, that's 19.22 and 50. After getting through this side of the channel here, clearly major sell-off. Now in this, what you do see that you didn't get intelligence on the last two Dow and S&P equities that we looked at is we have major volume that's coming here. These two incredibly big spikes just in right here. So you're talking about Thursday and Friday's action. And at this point, it appears that this is additional selling volume. Now this, no one can know 100% whether it is something that will push prices to the downside in a very fast way, or we will have a controlled sell-off. Everything that we're looking at so far, even though prices are temporarily stable in 1922.75, leads to the higher probabilities of prices trading down to 1888 flat, is laid up by these prices and broadcasted out into the future. Right here, let's take a look at the Chaikin oscillator, clearly down into oversold territory. Here, Chaikin money flow deep into oversold territory. No end in sight. So when we look at the MACD indicator as compared to the equities and the Dow, and the disparity is wide, and there is no halt in momentum to the downside, it's highly unlikely that prices would come to a screeching halt at the current level that we see right here. It's highly unlikely. The greater likelihood is that prices will continue to move to the downside. This we are prepared for. This we will continue to trade. I picked up myself 7 points on this day right here, clean. And we caught this day as well. So I'm prepared to go either way. If we have a temporary halt here and we go long on a give back, we're set. Prices continue to go right through here to the downside through 1918.75. We have incremental levels here every step of the way that we are aware of on all these opens and closes, looking for the next longer term goal, 1888. This is Jeff Killian, the Chief Market Strategist for the Inside Technician. My pleasure to present to the world tonight, and we look forward to seeing you tomorrow morning and the rest of the week within the live trading room. Good night, everyone, and all the best of all successes across the board for everyone on your upcoming trading this week.